Good morning. Today is Thursday, 17th of February. Welcome to number 550 episode of Talking Bull. This is Steve O'Hare from Signal Centre, and we're going to dive straight into the market moving news and then jump on to the technicals to give you a full roundup this morning to start your day. So let's dive into the news. There's been a strong rebound in US retail sales. For January, there was a 3.8% increase compared with a consensus forecast of 2% gains, although December data was revised down to show a 2.5% slide. Motor vehicle sales increased 5.7% on month. There was a robust increase in furniture sales, while online sales also posted strong gains. As we're opening up, the economies are opening up, people are going out and spending their hard-earned cash. Underlying sales increased 3.3% on the month, compared with the exceptions of a 0.8% gain, while the control group increased 4.8% following a sharp 4% decline for December. The downward revisions dampened the impact from the strong headline release, but the data offered some reassurance over underlying spending trends. The Fed minutes have confirmed the inflation fears. According to the minutes from January's Federal Reserve meeting, participants anticipated that raising interest rates would be necessary soon. There was also an agreement that uncertainty about the path of inflation was high and that risks were skewed to the upside, especially with reports of widespread input cost pressures. Most participants also emphasised that it would be necessary to remove policy accommodation at a faster pace if inflation does not fall as expected, and members also backed faster rate hikes than seen in 2015. Several participants did express some concerns over downside risks to the outlook. There is no major hawkish surprises in the minutes, and Fed funds futures rallied, with markets indicating slightly less than a 50% chance of a 0.5% rate hike at the March policy meeting, which curbed dollar support. The Canadian CPI inflation surged. The headline rate increased to 5.1% for January from 4.8. This was the highest rate since 1991 and above expectations of 4.8, while the core rate increased to 4.3 from 4%. Bank of Canada Deputy Governor Lane stated that the bank is on alert to the risk of more persistent inflation. He also stated that the bank will be nimble and, if necessary, forceful to tackle inflation. The inflation data and Lane's reinforced expectations of a March rate hike and the possibility of a 0.5% hike at that meeting. The Canadian dollar, however, was unable to make any headway. And NATO is sceptical over the Russian claims on Ukraine. NATO officials expressed this skepticism over Russian claims about withdrawing troops from the Ukraine border and stated there was no hard evidence of this. Overall risk appetite held firm, with expectations that there will be a protracted and lower level conflict. Risk appetite dipped again in Asia on Thursday following reports that Ukraine forces had fired mortars on rebel-held areas around Donetsk. Risk appetite will remain fragile in the short term, with markets continuing to react to media headlines. And down below in Australia, solid Australian labour data was seen. The rate held at 4.2% for January, while there was an employment increase of close to 13,000 for the month, compared with expectations of a decline of 10,000. The Australian dollar was unable to make headway as risk appetite dipped during the Asian session. So that about covers the market news. Let's dive into the charts and see what we can make of this. So I'm going to start with gold this morning, actually. Again, I was looking on my Gunter Head trade to sell this. It was stopped out shortly after the trade, and we've seen price action move aggressively higher this morning. And we've broken well above, let me take a look at the daily chart, well above this resistance that formed on the 16th of November last year. We can see that this was quite a key level, quite a pivotal level around 1875, and we've managed to nudge up to 1891 with the next target in mind being about $25 higher, 1916 we're looking at as forming resistance. In the meantime, Where would we be looking to set longs in this? Really looking to buy a dip back around about the 1880 level. That should offer some decent support, and then all the way down to 1867, where we'll see the Ichimoku cloud come in to support with this sideways confluence area of price action here. On the crude oil, we saw price action over the daily candle sell-off. We formed this evening doji star looking formation. Price action tried to rally, tried to push above Tuesday's high after the oil inventories figure was released, but failed and closed aggressively lower. However, overnight we have seen this market rally again. So support really coming in from 87.50 up to 88.15, and resistance really, the main target of the resistance is around about $94, which was the high we saw on Monday. So shorter term price action, we can see on the really short term charts, we're currently testing this sort of reaction lower, correction lower from the highs. Ichimoku cloud resistance coming in here. 91.28 really needs to hold, and we've got a little bit of trend line support coming in around about the 90.40 level. So watch out for those levels now. From the Brent crude oil side of things, 92.60 we've just failed at. 94.10 above that will be resistance, and also 95.40. Let's move on to cryptocurrencies. Take a look at Bitcoin. Looking at the daily chart, a bit of a hanging man candle, almost a hanging man candle. The body is quite thick here, but the same sort of reaction. We're seeing momentum stalling as we're sort of holding around these highs, indicating bearish divergence. We saw Tuesday's price action rally strongly. However, yesterday wasn't so positive, and we've had a little bit of a pullback. Resistance coming in at 44,750. Above that, we should find further resistance just below the $46,000 level, and support quite clearly at 41,600, all the way down to 41,000. Looking at the indices, price action has stalled yesterday in the FTSE. We had a doji candle, and we've seen a reaction lower this morning. Support in FTSE comes in at 74.81, resistance 76.87. On the DAX, we saw similar sort of price action, a doji candle where prices open and close at the same level, despite making a high, a fresh high, which we haven't seen since last Thursday, reacting lower and closing around about unchanged from the previous day's price action. This morning, we've had a move lower, although we've rejected the initial spike lower around about 15,250. That will provide support. Main level of support, obviously, all the way down at 14,827. Above this, we will have resistance at 15,540, then at 15,610, and then 15,736. The Dow Jones, again, a doji candle, signs of indecision across the markets. We can see on the indices, resistance for the Dow really coming in at today's high. That comes in at 35,000, just short of 35,000. And then we should have 35,135. That should offer further resistance. Support on the downside really coming in at 34,650. And then the main support, I would say, 34,312. Nasdaq, similar sort of price action. The overall riding formation that we're looking at is the potential for this head and shoulders formation with a downward sloping neckline, which would be a very, very interesting and aggressive type of head and shoulder. Again, drilling down to the price action yesterday, real signs of indecision, although we did close slightly higher, but then gains have been given up this morning. Support expected to come in at 14,450, before yesterday's low around about 14,400. And really the bulls need to push this above the 14,675, yesterday's high, to really bring the focus back on the positive side. But we are seeing momentum stalling. So we do have that indication of a tired market and bearish divergence. The S&P's support 4,430, resistance at 4,490. Hanging man candle yesterday, not looking so good, especially with the price action this morning, which is engulfing that and looking really slightly concerned about the potential for the rest of the day. If prices do start to be pressured, then there is plenty of opportunity for the markets to sell off on the downside. Again, head and shoulders formation, the overriding formation that we're focusing on the daily charts in the indices. So that about covers it from the technical side, and it's really down to moving over to the gun to head challenge. So let's take a look at which markets we're going to cover. After reviewing those markets, it does feel like a little bit we've had the 4-hour chart in the DAX. I'll highlight. We had this downward trending resistance, which we had drawn in, and we can see that we spiked through that early yesterday in trade, but rejected. And today we've also hit this resistance line. So this is forming quite a strong trend line resistance. So I'm going to go, put a gun to my head, I'm going to make a decision to get short of DAX. You know I'm the big bear in the market. I never seem to want to buy, but I do, I promise. But I'm getting short of this and looking for, I'm going to tighten the stop up. And we're going to come in at, we're going to get a nice 4-to-1 risk reward. Looking really to come back to this congestion area here. Let's put some Fibonacci lines on this chart, get a little bit of a better indication of where we expect to retrace to. Maybe that's a little bit going a little bit too far. And maybe I'll go for a 3-to-1 risk reward on this. So I'm getting short here at 15,359. The stop will be at 15,434, and the target is 15,134. In fact, I will adjust it to take out the candle, the 8 o'clock candle, 8 to 8:30. The high there was 15,439. So I'm going to put my stop just above there. And increase my target, keeping the 3-to-1 risk reward ratio, really looking for a 61.8% retracement in Fibonacci levels, whilst really sort of like selling into this and basing the 8 o'clock candle as a further rejection of the upside. So we're seeing lower highs here and really looking for this 15,247 level to break. That would be the ideal placement of a getting short on the back of a failure, but we've got a gun to head, so we're just making the decision as it stands now. So that about covers that from the morning perspective. Again, really focusing on those daily market headlines, and also looking at what we're expecting out today. And this is pretty much the day ahead. We've got 130 Philly Fed index. Yeah, 130 Philly Fed, 130 also US jobless claims. Tomorrow morning, we've got the UK retail sales at 7 o'clock. And the key events next week, we're looking at Eurozone PMI data, UK PMI data, the New Zealand policy rate decision, and US PCE price data. That about wraps it up. Thanks for joining me, and look forward to catching up with you again tomorrow for the last show this week. Take care, and good luck with trading.